Now, let's begin our technical segment, starting with the majors, major currency pairs. Let's look at the charts. Here we are with euro dollar, the king of currency pairs, currently at 107.17. Very slow morning so far, hovering above this 107.10 level, okay, which was support back in December 2015. Just below this line, we could mark here 106.90, 106.80. It's a bit crowded over there. Anyway, 107 does not really work as support, despite being a round number. Further below, we have the previous low of 105.70, the initial post-US elections low, and 105.20, despite the breach earlier this week, remains a strong line of support, the last barrier before the 13-year low of 104.60. So these are the lines to watch on the downside. If we look to the upside, I still stick with 108.20, which was another low back in March 2015. Sorry, March 2016 this year. And we almost reached 108, which is a round number, but I stick with 108.20. Above this, we have 108.50 and 110, of course, a round number. As you can see from the wider chart, the daily chart, we found quite a bit from the highs. Just on an election night, euro dollar traded as high as 113. We're still in much lower ground. It still looks like a correction or even a dead cat bounce. Certainly not a change of course for euro dollar. Let's move to pound dollar. We'll of course focus more on that later on. Currently 126.20. Here we are on the move. This is the daily chart. We're seeing pound dollar retreat from the highs, some kind of renewed dollar strength. But the reason mentioned, of course, soft Brexit pushed the pair higher. In terms of technical levels, we got closer to the 127.90 level, which was the initial post-Brexit low in late June this year. Didn't really reach it. 127.70 was the high, and now we're beginning the retreat. 126.60 is some kind of resistance at the moment after the recent fall. Looking further below, 125.85 is another line worth mentioning. 125.20 is already a much stronger level of support. If we look even lower on this popular currency pair on cable, we find quite a wide range there under 125.15. The next level is 123.80, and the last line for now is 123. To the upside, if we do break above the post-Brexit low of 127.90, I would mention 128.50 and 130, of course, the round level. Dollar yen, once it picks a trend, it never stops, but at least now it's consolidating. Maybe it has some altitude sickness there just under 115. Look at the spectacular rise from election night from 101 to almost 115. Anyway, 113 is the current bottom of the range. Let's add this important round number here. Further below, we have 112, another round number, and 111.40, which is a really, really strong line of support. Look at the way it separates ranges, serving initially in mid-November as resistance and later on as support. To the top side, we have 115 and then 116, which used to be a line in the sand for the Bank of Japan. So we have quite a few round numbers here on dollar yen, another popular currency pair. Moving to commodity currencies, dollar CAD, Canadian dollar strengthened. That means dollar CAD CAD fell quite a bit. 132.40 is the low we've seen recently. Yeah, works as some kind of support. To the top side, we have 133.60. It's a bit choppy. Canadian dollar is a bit harder to trade if you focus only on technical lines. Further above 134.80, which proved itself quite a few times in the past, and also late in November. it means last week, and further above 135.60. Capped the pair in mid-November, and it's followed by 136, a round number. Further below we have 130 as well, of course, a round number, which also worked pardon me, as support and resistance quite a few times. So I would say between 132.40 and the current and 130, we have very few lines. It used to be, yeah, this pair, as you can see, is quite choppy. Still looking for a direction. Aussie dollar suffered the GDP release and also other events that strengthened the dollar earlier. Currently at 74.30, 73.65 serves as support, followed by 73, a round number. Further below we find 72.50 and 71.75, but these levels haven't been tackled since the summer here in Europe, not summer in Australia. To the top side we have 75, a round number, which works as a great separator of ranges. As you can see, we had a swing low to 75 back in October, and now it serves as resistance. Next up, 75.80 and 76.50. Kiwi dollar found its footing just above 70 and then managed to grind its way back up. 71.80 serves as resistance in the immediate line to watch. 70.50, which was a double top many months ago, could turn into some kind of pivotal line here in the range. Looking further above, 72.65, 73.60, and 74.20 are lines to watch. Under the 70 level, we have 69.50 and 68.80. And dollar Swiss, not my favorite currency, the Swiss franc, currently at 190, 100.90 to be precise. We managed to top 102 only for a very short time. 102.20 is resistance, high above. Of course, the level of parity is was a swing high in October and also serves as support at the moment. 99, 98.50, 98 levels to watch in an area where the pair passed quite a few months. Anyway, currently above parity, I would mention 0060 to 101.70 as the current range. But remember, the Swiss National Bank intervenes here quite a lot. Okay, so that concludes our major pairs.